Hello traders, it's ETMFX, and in this lesson, we're going to break down my EURUSD trade that made me $1,500. We're going to cover this step by step to make sure you guys also can replicate this exact same trading approach and make some profits. This is the EURUSD trade. It was a 5-to-1, but let's go back to what made me initially take this trade. On my free Telegram, I posted the only pair I'm watching is EURUSD. The NY Open looks promising, and London did its job. So let's get into this. So the night prior, this is where price action was when I was analyzing. It was around 9 or 10 o'clock, and this is where price action was. So what I was looking at is price was initially in a bearish momentum. The order flow was bearish, as you can see. But what I've noticed is there's a slight change of character, and not the generic change of character. What I've noticed is the institutions tried to sell price at premium. They tried to sell price at premium, price sold off, but it found rejection in our discount. What does that mean? That means the sell orders institution sold with here was less than the buy orders they purchased here. That means they purchased price again. For more sell orders here than the buy orders here, price would have continued lower. But the fact that price found rejection, what does that mean? That means that this buying power is more than likely greater than the sell power here. So that was the first clue. And when you look at your zones, when you look at your zonal trading approach, you would see the EURUSD is actually bullish. And I taught that in my higher time frame mastery course, how I look at zonal. So when I woke up next morning, the day of the trade, where this is how price action was. It was around 6:30. And what I've noticed is price is rejecting from the 50%, the fair price of the initial range that we were working in. Why am I still in this range? Because the premium rejection and the discount rejection was a part of this range. So I'm still sticking with this range until the breakout. And what I've noticed is price is failing to break below the 50%, the fair price of the range. So that's another confirmation that made me watch the trade even more. And the main thing is, 1 second, let's mark up our fair price. So that we mark our fair price. What was the other clue? Main confirmation here is, which is even more important than the rejection from the fair price, is the tight Asian range. This was the Asian range. And look, the Asian range was extremely tight. What happens when the Asian range is extremely tight? A lot of times you get this kind of setup. It's called AMD, accumulation, manipulation, distribution. Let's say this is the Asian range, it's tight. During London, you would see a hunt. So you would see a AMD, an accumulation, manipulation, distribution. You would see a tight range, a breakout to the opposite direction, and price to continue the opposite way. This is what you would see when you see an Asian range, especially when it's going along with your bias. Once I've seen the daily range and I've seen the Asian range, and I've seen the rejection from the 50%, I was like, okay, this is more than likely a stop hunt. The fact that now I know that this is a stop hunt. What is a stop hunt? A stop hunt is on a daily time frame. Let's say this is a daily candle. Let's remove this. If this was a daily candle, and this was a bullish daily candle, the stop hunt would be the wick. Of the daily candle. And what is the wick of a daily bullish candle? That would be the low of the day. So now I know the price is more than likely high probability at its low of the day. The low of the day has already been set during London because we had the tight range. When the tight Asian range happens, that means there's a manipulation going on. And when you have an expansion to the opposite direction, that's when you can confirm that this is a AMD, accumulation, manipulation, distribution setup. So now all I'm looking for is a retracement back to my stop hunt to take advantage of catching the low of the day. So by the time I actually started looking for an entry, it was late 7 o'clock. So it was like 7:55. And this is how price action was. So the main thing I noticed is this liquidity. So initially what I was looking for is a liquidity sweep. I was looking for a price to get down under this, come back and continue higher, knowing that this is the low of the day and this is my protection. This is my defense. So what happened once price took this low, I got in my first position. So I got in a buy right here. But what happened? Price shot up. Okay, look what happens next. Price drops lower. And what happens when price drops lower? I don't panic. Why don't I panic? Because as you can see here, my stop loss is under my purge. My purge is my defense. So my stop loss is 20 pips. And my TP is, and my take profit is this level of liquidity right here. As you can see, you have a FTC liquidity right here. That means this level will be used as a magnet. So my first TP was this level of liquidity, this FTC. So let's go back. So price started to head lower. My second position was this OB. So my second position was right here, with this still being my stop loss for the second position. And as you can see, price started reacting. It hit my first TP, and that's when I exited out of one of my positions, and I kept some runners. Hope you guys like the video. Make sure you like, share, and subscribe. In this video, I try to include every single thing that I look at when it comes to looking for entry. So I walked you guys through my point of view looking at the market and how I approach analysis the night before and what I look at when I first open the charts in the morning, and basically took you guys through the entire process. And if you guys are enjoying these type of videos, please let me know in the comments, and more will be uploaded. And